Monday, August 12th, 2024, and starting off looking at later in the day on Monday here, but a week ago is when that big crash, fearful sell-off day happened, and it started kind of the Friday before, and then last Monday there was a big drop, and market kind of recovered through the day and through the week. A lot of the names are still down, but the fear part kind of seemed to go away a little bit day by day, and then I think almost by now it was feeling like, oh yeah, it's not big. I don't know, because if you just look at VIX, which is the volatility index, so when you print, we had to print that high. This is on monthly candles right now, so like last week when we touched that high on the VIX through the week, right, it spiked and then settled all the day. So put this, that's the week, that's the month. So look at the last print on the VIX that high, anything above 50, right? That was pre-COVID. That was as COVID was ramping up, Feb 2020, and then in March and April we were hitting, or March was the highest VIX, right, 85. We just hit 60, 64, 65, and so that's a level not since right as the crash of COVID stuff was going on, and then Jan 18, I don't really remember what was going on then off the top of my head, but you got to go back pretty far and very infrequent to go that hard on the volatility, and that's the financial 2008 crisis. So that's a pretty high print, and I would be still remaining cautious as we look at S&P here, where this is on the month. Let's look at the days, where it's been like trying to take the stairs back up. We gapped down, that was I think Friday, and then that Monday, and the Monday, it closed higher and it walked itself up day by day here, and here we're on Monday now. But I mean, I don't know, it seems like you could come up here and then head lower again still, or if there's any other news that's going to drive things right now. So looking at timing wise, I'm still opportunistic in shopping, this is a good thing. Like, you kind of like it to be a little rocky when everything's running like a freight train. It's hard to buy things because everyone's deploying money and every name is hot. When things are good, everything's just racing higher. So this is a good time to look for some names. So that's what I've been doing. And then the other thing I want to talk about just in general for investors' mindset, because the reason a lot of people are messing up when they get into the stock investment side of things, whether for saving, when they get out of saving and they get into investing and they get into stocks and really putting your money at risk, that's what you're doing. You're expecting to make a return or a higher capital appreciation of what you bought, sell it for a higher price. You're taking on some risk to do that. Like, that's the risk return. Like, anyone who's putting their money at risk, you get to earn a return. If you don't put any money at risk, you don't get to earn any extra either. It's just whatever you saved, right? But as everyone's learned now, you can't just sit on your dollars because inflation. So I'm looking here, like, what are we gonna buy if there's some more weeks we get a good shopping opportunity? And the real thing here is that if you catch a name on a good price like that, that's good. But we don't buy things just because the market's down, or we think, oh well, it sounds like that's such a solid company and the shares are down and that's a good reason to buy, right? Wrong. Because we still want to look at what the business you're getting is. And this is what I mean why people mess this up, because they're gonna look at the dollars the whole time. And this is the only thing people do this with. Like, there's a behavioral finance element I've always liked about investing, that it just takes a certain type of a game plan, mindset, mentality of a person to, you got to be long-term thinking, delayed gratification, willing to be in the face of others saying all kinds of things, like hold to what you believe on about a company in this case, right? Like, I've held all kinds of companies for many years of fools on CNBC or wherever, YouTube, anyone, hating on what a company you're invested in or whatever. And if you're just going to listen to whatever the most recent opinion you heard is, or voice from talking heads on CNBC that they get on, any random person who's available for comment that day, the narrative can be swung any which way. And really, I think the news does a good job of making sure you don't know what to do. They give you both sides. That's kind of their job most of the time. They want to find who thinks it's a bull market, who thinks it's about to turn down. So what their job is to try and give you information. How they do that is still, you got to dig deeper, because they're just giving you headline, really surface layer. And then, of course, the biggest thing, everyone, especially those people on the desks, on the shows all day long, they're just not studying these companies the way that when they talk, oh yeah, this and this and this, and I think this is going to go forward into the next Q. They do not look at these that much. When it's your money, you only need 5 to 10 companies that you really know what's up, and you can have your investments be pretty stable, pretty sure about the capital preservation, because you don't want outlandish risks in weird bets and small names. Investing is for sure for people who have a steady plan. That's anything less is gambling to me. So the mindset you need, though, I'll get back to that, and then I'll wrap up here. But the mindset is, you buy these shares, and this company is quoted all day long by others and by the market itself, because there's people trading it. So the way the stocks work is that price you're seeing is just the last traded price that two people met on. And this happens instantly now with electronic trades and stuff, but it's just the last agreed upon buyer-seller transaction that happened, bid and ask, and somebody says, yeah, I'll do that. So that's the only thing people treat in this way, because you can get a price on it all the time. What you do with nothing else, you do this with, you get a car, you get anything else in your life, you buy a new phone, you take your money, you go exchange it for the good or the product, service, whatever. That's the last you thought about the money. Now you've got the thing, right? You got the laptop or the car or doesn't matter. The stocks that you get, people, because it's an account, because you log in and you just have a account view dashboard with a dollar sign of your values and everything, and because it's liquid, you can click buttons and just tap and sell it right away. But because it's quoted in dollars the whole time that you own it, you're not treating it right. You bought a business, you now own a business, you're a shareholder. So if you buy 10 shares, you no longer have the money. Don't worry about what dollar amount. It's kind of like setting your alarm in the evening, right? Now, you set it with the intent to wake up at what you're setting it for, right? So the only thing that needs to happen is the future you needs to stay with the program. When you put the money away, you forego from paychecks or other income, anything you do, you're saving it into investment accounts. So you're doing the right step up early on. When you put it into the investment accounts and still don't let it be spent or just in short-term purchases, all still the right moves. When you select and research and find the company you want, best move, deploy the money, buy the shares. Now you own a business. That's the way to think of this. You own this company, Disney, Apple, whatever. And people are going to move around the price on it all the time. But you got rid of the money, is my takeaway for you here, because you can exchange it so easily. They'll quote you right there. it's worth this much. It's worth this much today. If you sold it all, it's worth this much. This is how much you're up or down, right? That dollar sign is like a powerful little thing for people. You put that in front of numbers, and you don't want to lose your cool. You got to stay with the plan that you had when you put money away. And that was for a bigger thing than whatever the number that's going to be in front of you right there is, because the idea too is that it's this life that's out in the future. So why are you investing knowing where this for me especially, knowing where a company's, how much is left in it when the share prices move enough to sell and to do the things you were planning to do with the profits and such, but also to just know that's where the value I put on it got reached. And unless you think they've got a reason to keep going or a bigger place in the market to hold on to, you profit out, you move along, and you get excited about going to the next thing, but it's because you have a plan. You have this thing in your mind that you're chasing. That's why you hold the shares and you don't worry about the dollars in the meantime, because investing was for this long-term plan, 5-10 years out. This is what I want to do with the money. This is how I want my life to be supported. And you can't trade that in, because week by week there's headlines, and it's just going to happen. It's like headlines are going to happen, news is going to happen. Is the business still selling its product? Short of business owners know this. Short of the revenue line dropping in a weekly or monthly type of a fashion, if the headlines didn't do that, if there wasn't some bad thing about the company that their revenue just took a nosedive in a fast and large manner, this is fearful opportunities usually if the stock goes down for executive shuffles sometimes. This is why you just have to know the business. That's what I mean. You're taking your money and you're buying into this company. So don't look at your money anymore. You should be looking at the company, right? You don't look at, I'll just say for $1,000, right? I've got $1,000 into this company, and then it's 890 one day, or it's 997, or whatever it would be. As it moves around, you can't look at that. If you're doing that, you're losing, because what you should be doing is knowing, I bought this company. That's not the only time you're going to buy it. I begin buying it when I like it. I stop buying it when I think it's finally hit the mark, when everyone caught on and there's an appreciation and the shares are just you're like, wow, I bought them so far back at this price, it's hurts to pay at this. You don't want to, you don't have to. That's the point. You were there at the beginning. So that's the idea, is you need to take your focus from, you took the money, you got rid of it. That's what you did, right? They gave you shares. Go study the company. Study what they're doing. How does the quarterly revenues, revenue growth, year-over-year revenue growth, anything that's positive. Obviously, sales is key. If you're not growing revenue, I like to mostly be in companies that are going to be growing, right? Can Coke grow its sales quarterly? Different to look at than the iPhone type stuff and Tesla and things that make a hot new product. So that's what you got to think about, is tracking the business you bought now, not the money. Talk to you later.